Good afternoon. In this video, we're going to go over this past week's trades and the weekly recap. Before I get into the recap, if you're not in the room, you can find the description of the video and in my bio section of social media accounts. Also, please like the video, subscribe to the channel if you haven't done so already. Now, I did finish the week with 20 wins and 0 losses for a win rate of 100%, not one loss this week. Definitely pleased about that. Considering that this week we had a lot of weird action this week, and the fact that I finished flawless and did really well is kind of surprising. So the week started out kind of choppy. Monday and Tuesday started out choppy. Then we had FOMC and earnings that kicked things off and really got things going, but not the way I expected it to, but we adapted to it. But anyways, with that said, we'll get into the video and try to keep this short. So trade ideas room on the 29th, SPY puts on the 486.50. Let's see, this is the 29th right here. You see we gapped up. Let me just back this out just a little bit so we can get a broader picture. This is Friday. Started to drop a little bit Sunday, started to gap up over Monday morning. It's kind of like channeling right here between the 488 and 487.50-ish. So I picked, what did I say, 486.50, which is down here at this low. Friday's low right down over here. First 10-minute candle was green. Second one was red. Didn't really do anything. Didn't really do anything at all. I just stayed choppy. This is the way the mornings have been lately. Just hasn't been really any follow through. Usually I like to play the first 10-minute candle breakout or breakdown, and usually we've normally gotten some good follow through, but we just don't get it. It's a fake out or it's a double fake out, and it just hasn't been there. It's kind of very annoying. But I didn't trade until what, 10 o'clock on Monday, which is right here. When I take puts, I took puts at 10:04. Okay, I do remember this. I took it underneath the I'm not sure if I took it underneath the 487.80 or if I took it underneath the 487.75. I think I took it under the 487.75 because I grabbed the 48.90 puts at 6:30 and they went from 6:30 to 7.80, so I got $1.50 plus move on that. So yeah, I think that's exactly where I grabbed it. This is what I meant, a fake out. It didn't go to a new lower day. When it's doing this, sometimes if I have like a mid-range play or setup that I like, I will take it mid-range. But because I had this body right here and these other candles up here, kind of like not a high day but lower, making a faking out, trying to break high day, but it ended up faking out. So I didn't want to take it under these two candles. I figured if it went under the body of this one, it was probably going to be pretty good to go into probably lower day, if not lower. But it did not go to lower day. It just went to I'm not even close. Only went to what, 47.50, 60. So it didn't really go anywhere, 15-20 cents. But anyways, it was very, very choppy. Then I took puts again at 10:32. This is the one where it broke below the area again. I took the 48.90 puts, this time at 6.50. I think I grabbed it in the same area, and I grabbed the 6.50, and they went from 6.50 to 8.90. So I got a little bit of a play on that, better play on that. So definitely more pleased about that play. Just faked out. It went to break out, it faked out, then it broke out again, but then ended up getting rejected hard, and then it broke down to a new lower day. Then it got bought, then it went to new lower day, well, it went to lower day again for a double bottom. Then this is just a mess. I mean, it's hard to decipher what it's gonna do. It's faking out, it's confusing people. It doesn't matter how long you are in the game of this. You just gotta adapt. And one of the things that I know, I end up buying a lot of breakout and breakdowns, but when you start to see that it's ranging or it's faking out on both sides, it's better just to play the middle of the range. If there's nothing there, just wait for some candles to form. Like these candles right here was my area where I grabbed that. And I mean, Right here, you could have grabbed calls right over. Did I grab calls? No, I didn't grab calls here, but this is the middle of the range. To me, I know some people in the room, they like to buy puts at higher day and they like to buy calls at lower day. I do not like doing that because the market is so bipolar, so crazy. At higher day, the market could squeeze. At lower day, the floodgates could open up. It's just way too risky to be buying calls at lower day or buying puts at higher day. I don't like it. It's not for my cup of tea. To avoid playing those certain scenarios, I find that you wait for a couple of candles in the middle of the range and play those. Yeah, that's just the way my take on it. So the next play I took was calls at 234, which is rate 234 rate 234. Why did I take it right here? 234. I'm not quite sure why I took it here. 234. Make sure I get the right day. Okay, 129, 234. I don't get it. Only thing I can think of is that it popped up here. We had a green candle right here, and I bought the higher day breakout over the higher day. That's the only thing I can think of why I did that. I don't know why I did that. But anyways, I got the 4,900 calls to 650, and they went from 650 to 790. The play did work out. I'm kind of questioning why I played that like that. I'm not on it quite. I'm not sure, to be honest with you, why I took that right there. I probably should have taken it here. There's an FU setup right here. It's a perfect FU setup right there, and it just, I don't know, whatever. I ended up taking it. Ended up being a pretty good win. Then it took calls at 256, which is I did take this. I did take the FU setup. Okay, I did take this. The 4,900 calls at 640 this time. In fact, I think I grabbed it over the body of these candles. Over 489, I think, is where I grabbed it. Because you get the red candle right here. And yeah, I grabbed it at 256. So I grabbed it in this candle because this candle starts at 3 o'clock. So yeah, I grabbed it in this candle. As soon as it broke over the bodies of these two candles, I grabbed calls. I grabbed the 4,900 calls at 640. And they went from $640 to $29, so they went up 400% if you held all the way through. Ended up being a good move. That was a good FU setup. A very, very monster play. Not quite sure if that was a news play or what. I don't remember what was happening that day. So much crazy things have been happening this week, so not quite sure. Now on to Tuesday. No, the 30th, not Tuesday. Yeah, Tuesday the 30th. For some reason, I was looking at Wednesday. Anyways, let's see. Trade ideas room, Tuesday the 30th. SPY puts in a 490, which is down here. I called it at like what time? 9 o'clock. So it was up here at 9. So yeah, 490 down here at this low. First 10-minute candle is green. I didn't take calls. I just wasn't too comfortable with it. It just kept going. It did go up a little bit. And the one thing I don't like seeing is a big green candle at open when I'm expecting a drop. And then the second 10-minute candle is an inside candle. I don't like seeing that. I don't like seeing inside candles after an opening candle because it shows that the market doesn't know which way it wants to go. So I kind of avoided it. But as soon as it broke lower day, I grabbed puts. I didn't grab it up here. I grabbed it down here because I grabbed the 49.20 puts at 740 and they went from 740 to 850. So they only went $1 plus. So that I bought it at lower day. That makes sense right there. Then I bought, this was news too. I don't remember what the news was. I don't want to really go back and look at it, but there was news that dropped every day, almost every day at 10 o'clock, some kind of news drops. Then I took puts at 1026, which is right here. Got this nasty red candle. Came back up an inside candle. Then I took the 49.20 puts at 740, and it went from 740 to 840. So I'm going to assume I bought it underneath the 490 50 area. I'm going to assume I bought it there. what they say, yeah, that went from 740 to 840. So yeah, that makes sense. That's why I bought it there. Then I bought puts again at 1044. Right here, right when it went underneath, yeah, right when it went underneath the 490.50 again. Yeah, so when I got puts here the first time, I got puts here when it broke again. It came back up when it broke again underneath this 49.55 or 50 area. That's when I grabbed puts again for the third time. And this time they went from 710 to 780. Not much of a play. So yeah, the first one was like $1.10. The second one was $1, and this one was like 70 cents. So the wicks were just getting bought up. Lower day was getting bought every single time. I didn't take calls. I probably should have, but the next play I took was at 225. Now you got to remember, it looks like I'm missing a lot of plays. I got other things, other accounts, and challenges and stuff like that going like that. So I'm not going to catch every single play with the SPX in the normal sub room. I'm only going to play up to 4 of those, and then I start focusing on retirement accounts and challenge accounts and stuff like that. So I am going to start focusing more on those than I do normal SPX. But I'm going to make sure that I at least get at least 2 to 4 SPX per day. The goal is 4, but sometimes under market conditions, if they don't like it, I'm lucky if I get 1 or 2 sometimes. So nothing's going to change there. I'm still kind of pumping out the same kind of numbers I've been pumping out for a while, but I'm trying to do other things at the same time and grow other accounts. So that's why you need to be a platinum member to get all the other accounts. With that said, let's see. Next play was 225 calls. 225 right here. Right here. It goes up to VWAP, gets rejected a little bit, goes to VWAP, gets rejected, comes back. And once it breaks over this, you get the bodies of these candles right here. Once it gets over 491, I think I grabbed it at 490.95 or maybe 491. I grabbed calls. I grabbed the 49.30 calls at 260, and they went from 260 to 225. Yeah, I got that right. It went from 260 to 380. So maybe I grabbed it up here over 391. 260 they had to be at the money, because I wouldn't have gone at 2:30 in the afternoon. I would not have gone in out of the money. I would have been at the money. So at the money must have been cheap, really cheap. So yeah, 260 to 380. So got a nice little move right there, and went to higher day and rejected. Then I grabbed calls at 327, which is right here. I see why I did that. We got the higher day, quickly rejected, harsh rejection right here. Bounced up the 20 EMA, which is the blue line. Came back up once it broke over 491.50. I grabbed calls. I grabbed the 49.30 calls at 220, and they went from 220 to 370. So I got a nice little play right there. So ended up being a good play. Did I buy it down here? Because if I bought, yeah, the 49.30 calls, the first one I got was at 260. They were in the money. They came back. Maybe I bought the dip. Let's see, 327. No, I didn't because it was in this candle. So I must have bought it up here. Well, anyways, I don't ignore the price. 490.30 calls at 220. I had to have gotten it up here over the 491.50, and they went from 220 to 370. So yeah, then it finally dumped. It just was a range day, not much going on. Then let's see, FOMC was Wednesday, which was kind of a fun day. Trade Ideas Room on FOMC day, which is the 31st. 5 puts at 488. 488 was rounded down from pre-market low. Yeah, 488 was basically this low rate. No, yeah, rounded down. Yeah, it was not, the lows weren't there. Let's see. Yeah, 488 was this area right there. You can see right there on the hourly. And the pre-market right there, 488. close to it. Remember, support and resistance is not an exact number, it's an area. I know some people like to use supply and demand, but I don't. I think it sounds stupid. But support and resistance, I've always was going by that. I always have been, always will be. Support and supply and demand is just another fancy way that people sound that try to sound smart. Just people that just like to try to change the wording lingo to make themselves sound smarter, like they got some kind of magic wand. But it's the same thing as support and resistance. It's an area, not an exact number. So, anyways, obviously with support and resistance, the higher the time frames, the more valuable it is. So that out of the way. First 10-minute candle was red, kind of an indecision candle, but I was looking at puts anyway, so it broke low at day on a red candle. I was definitely liking the put, so I don't normally trade in the morning on FOMC, but FOMC was cheap this day. Usually when Powell is speaking on FOMC days, they end up being too expensive, and I just sit out. And another reason why I sit out is that if you take trades and you take a couple losses before FOMC, you're not really, you kind of get in your own head. You second guess yourself, or you've taken the loss and you don't want to take any more losers, and you just take unnecessary plays and losses. And to me, I think it's easier just to sit out until FOMC, because if you take two losses and you go into FOMC, it's going to mess with your head. You're going to second guess yourself. You can end up adding to your losses, and you don't want to do that. So to me, normally I just sit out, but because it was so cheap and I liked this play, I took this play and I called it. I just took the play and waited to FOMC. So as it broke lower day, I took the 48.80 puts at 670, and it went from 670 to 1010. Then I just sat out till FOMC. Then when FOMC came, I grabbed the 48.70 puts at 670, and I grabbed the 49.05 calls at 650. So I grabbed it early. I grabbed it like at 140, which was right here. But when it popped up right here, I sold my calls. They went from 650 to 10. And then the puts went from 670 to 1220 right here. So they ended up being a pretty good play. So the last few FOMCs have been duds. So I figured this one would probably be pretty good. So, but yeah, the calls went to 10 because I bought it, I think it right around down here, right around the 47.25 area, and it popped a little. So one other time I did that and I popped and I didn't take it, or I didn't at least reduce risk. I kind of regretted it. So this time I took some. Let me just make double sure I did do that, because I'm almost certain I did. Yeah. No, I didn't. No, I didn't do that. I did the opposite. Yeah. I sold some puts at 10. And yeah, I sold puts at 10. Yeah, the calls, yeah, we're up here. I didn't take the calls out at 10. I took the calls at a loss. I did sell the puts at 10. And the calls I dumped at 410. I only took like a small tiny loss on that, but the puts outweighed the calls, so that was a win on my part. But the calls, they went to 10 up here. I didn't take it for some reason. I thought I took the calls. I'm glad I double checked, because I would have misinformed you guys that I did something when I didn't. But for some reason I thought I took calls. Maybe I wanted to, but I didn't. I don't know what I did. But yeah, I didn't take the calls. The calls, they were up right here. Then I took the puts. I scaled out of the puts. Then when it popped up a little bit here, I got out of the calls. So FOMC ended up being a winner. But I mean, if you held, those calls ended up doing really, really well. They ended up going, I think, to yeah, they went over to $13 or something like that in this play right here. But I did grab calls. I mean, Get back to traders room. Yeah, so that's what I did. I dumped the puts. I sold my puts into strength, and when they bounced a little bit right there, I dumped my calls right here, right in that candle right here. So when it dropped a little more, it popped up. I remember telling people in the room, if it gets over 487.50, I was taking calls, which I did. I took the 4,900 calls. They went from what, 7 to 13.20. So that ended up being a good play. Actually, no, those calls went to 10. The 49.05 went to 10. This is where it went to 10, but yeah, on the 4,900 calls went to 13.20. I know I'm rambling. I seem like I'm all over the place. I'm just a little confused at how I played this, but I'm starting to see this. So I sold the puts there. When you see the wick right here, this is where I dumped the calls. That way I had a positive FOMC play. It dropped back down. He had failed to break new lower day. Powell was talking, and when he came back up here, I took calls right here. I took the 4,900 calls at 7, and they went from 7 to 13.20. Then it started to dump, and I took puts at 302, which was this candle right here. I think I took it at new lower day underneath 489.90 is where I took it. I took the 48.70 puts at 640, and they went from 640 to $20 right there. So that ended up being a really good play. Yeah. So this was a really, really good FOMC Powell end of the day, because we got 3 good moves. We got the dump. We played it correctly. I mean, we played this FOMC practically flawless. No, obviously don't want to buy calls at the end of the day on FOMC, because usually when FOMC picks a direction, it just keeps going. But it didn't this time. It played like a normal FOMC. You get 3 moves. You get 3 moves at FOMC. The FOMC move, the Powell move, then the end of the day move. So this was a classic FOMC play, and we played it exactly like that. We sold the puts, I cut the calls right up here. Then I got over the 487.50 area. We played calls, it popped. We sat and waited. When it broke lower day, I took the chance because it was like, I don't remember what was said. Something good, not good was said about something about maybe the rates weren't imminent or something like that. Rate cuts weren't imminent. And the market didn't like that. So when it broke this lower day of 485.90, I grabbed puts. So yeah, we played FOMC perfectly. And this was a picture perfect FOMC day. The way we played it, the way it played out. So I definitely can't complain about that. That was played perfectly. Now on to Thursday. FOMC's over with. SPY puts under 484, which was down here at this low, a little higher, rounded up. First 10-minute candle is green. I took calls over the higher day. I probably shouldn't have. I took the 48.80 calls at 650. They went from 650 to 780. I think that I sold it in here because I remember that I didn't sell it here. It came down, went underneath lower day. We had news and it popped, and that's when I ended up selling it into this pop up here. Then I took puts at 1050, which is right here. Right when it broke below 485, you get the body, and the wick, all right there at 485. Definitely like the area. As soon as it broke that, I grabbed the 48.60 puts at 720, and they went from 720 to 1370 on that play right there. So that was a great play. Then I took calls at 1247, which is right 1247 right here. Yeah, right here. This massive green candle, it pulls back. As soon as it breaks over this 487 area, I grabbed calls. I grabbed the 48.90 calls at 530, and they went from 530 to 1270 in that pop right there. And because we were having a bunch of AI news and stuff like that, so the market was just going freaking out. It popped up, made a new high day, quickly rejected. I remember I was looking at Head and Shoulders here, because you get the left, you get the head, and you get the right shoulder. So I was looking at Head and Shoulders. I was actually looking for puts underneath 486.40 or 46.35. No, 46.40. I had to pause the video for a second. A car alarm was going off. I thought it was mine because I left it outside last night. What was I doing? Yeah, because I was looking at Head and Shoulders right here, because because I thought, okay, maybe we're going to have a head and shoulders after this ridiculous move. But no, we didn't. I mean, the head and shoulders were there. Then it voided it once it broke over 487.45. So I took calls at 240, which is right here. So yeah, the voided the head and shoulders, popped up here, pulled back a little bit. So when it broke out, got a little bit of a flag right here. So when it broke out over 487.85, I grabbed a 48.90 calls at 650, and they went from 650 to 1180 right there. So that ended up being a good play. So yeah, I was definitely looking at puts right here, head and shoulders. Of course, it was just a fake out, but just because the pattern's there doesn't mean it will play out. Then on to Friday. First 10-minute candle, I actually traded his room. I said SPY puts at a 488, which is down here. What was 488? 488 was over here. This area right in here from Thursday. First 10-minute candle was green. As soon as it broke over high a day, I grabbed calls. I grabbed a 49.25 calls at $8, and they went from 8 to 11.10. So this is the kind of plays I like. I mean, we got a nice green candle, and we got a continuation on the second 10-minute candle. I just don't like seeing the morning chop, and that ended up playing out pretty well. Then I took puts at 11.56, which is right here. Well, I'm not quite sure why I took it here. 11.56. 11.56. Was there something there? 11.56. I don't see anything. No, it's on all-time high. It was over all-time high, 492. I'm not quite sure why I grabbed it there. I might have been looking at the RSI, possibly. I'm not 100% sure, but for some reason I grabbed puts right here. Oh yeah, I remember one, the RSI was high, and it started to reject. We had all this monster run, and it hit 494, and it started to reject. So I actually shorted right at 494 when I started to see it was starting to get a little sluggish. So I grabbed the 49.50 puts at 750, and they went from 750 to 10.10. Got a little bit of a play, not much. Then it flagged, then it popped. I like seeing when it rejects an area, and actually rejects it normally, where it just pulls back a little bit, then it gets its gears going, and then it pops. But it just sometimes it just gets to a resistance level, and it just goes through it like hot knife in the butter. It just does not make it any doesn't slow down whatsoever. It just keeps going like it's not even there. And this time it actually did. It rejected 494 a little bit, pulled back, got a nice little puts play out of that. Kind of crazy how I got puts out of that. I got lucky, but I mean, I saw on the tape that it was heavy selling. I saw that it was rejecting, and I was going to get at least $1 plus move out of that. So that's what I ended up doing. Then I took calls. The last play of the week was I took calls at 145, which was right here. Right here. Oh, right here. Got this move up here. Massive red candle. Didn't chase it. I don't remember what happened here. I think NVIDIA and Meta was pulling back from the massive, insane run, and didn't really pull back much. But yeah, it dumped there. Then it started to come back. I didn't want to touch high. I didn't want to touch calls right there. For some reason, I just didn't feel comfortable. Pull back a little bit. It's holding the 20 EMA. It bounced off. Well, it went through the 20 EMA, but it quickly got bought up. Didn't quite get to the 20 EMA. It's definitely making an ascending triangle right here. You can see it. It's flatlining at the 494.50, making higher lows right here. So when it broke over the 494.50 area, I grabbed calls. I read the 49.60 calls at 650, and they went from 650 to 1140 right there. So that ended up being a good play. So yeah, that was it for the week. Very strange week. AI bubble is continuing. Meta, NVIDIA, Amazon, Google, everyone's getting into AI. It's just driving the market to insane levels. Starting another bubble. Something very bad is going to end up happening sometime soon. Question is, I have no idea what it is. We'll just take it one day at a time. So with that said, that's the week. No losses, 20 wins, good week, considering the market was kind of not the way I expected. It was kind of doing some crazy things. We managed to navigate it well, so I'm not going to complain about that. Whenever you have a flawless week, you definitely cherish it. So that's going to do it for the recap, and thanks for watching.